Good morning, welcome to Forex in Four. Today is Tuesday, November 22nd, 2011. All right, this morning we're seeing a little bit of a snapback after yesterday's major sell-off. It's a little bit of a, I guess we'll call it a dead cat bounce for lack of a better word, but not really. I mean, what we're seeing here is that, we're seeing that you get these little up moves and a larger down move, and the overall trend looks to be a little bit lower. I'm just going to back out this chart of the euro here on the 4-hour so we can see exactly what's been happening. You can see over the past month, essentially, euro has been moving down. We've sort of been putting in a little bit of this bottom here. Okay, it looks like we have a little bit of support down at the 134 area, just ahead of that S1 pivot support. I'm going to come back to the 30-minute chart here, and I'm just going to show you what's been happening recently. And you can see we've had this range-bound activity, right? Moving up, moving up. All right, we've got the R1 pivot resistance up here at about, say, 136. All right, and we've got the S1 pivot support down here. It's actually about 134.30, but you can see 134 is just the magic number there. So we're sitting in this tight little range. Well, what's happening now in the markets? Well, first of all, we had this massive sell-off yesterday, largely in part due to the U.S. Super Committee's on Deficit Reduction's failure. Yesterday I dubbed it super failure, and I guess that wasn't very original because everybody else called it the same. But essentially they failed. All right, a lot of people, had high hopes for this thing. I don't know why. There's a major disconnect there as far as what it's going to take to reduce deficits, reduce spending, get our economy back on track. And it's unfortunate. So it looks like this is just going to set up for the, you're going to hear about the obvious failures over the course of next year as we move into 2012 elections, and again, we'll let the people decide. So that's really what's happening. If you're somebody who's without a job or something like that, well, I'm sorry to hear that. There's just not a whole heck of a lot that's going to be done for you. So anyway, one of the big things out of the super committee was, I can't believe people had such high hopes, but I think what people were concerned about was that the rating agencies were going to lower the U.S. Credit rating again based on what's happened, and that didn't happen. Okay, they actually they all came out and they reaffirmed U.S.'s credit rating, so that's, I guess, a positive in some respects. But at the end of the day, last time we got the credit downgrade, all right, the bond market here yields didn't rise, but they came down, which was essentially a bond market rally there. So it's one of these things where the U.S. is it's going to be hard pressed to get them out of this flight to safety thing, because we are the world's reserve currency. So despite all the problems that we're having here, all right, we are still the only game in town. Now, as far as the flight to safety trade goes, okay, you can look here and we can look at dollar yen, and you can see that yen had weakened just a little bit here on this news yesterday. All right, we got this pop higher up here to above 77. All right, now we're pulling back down and coming back. So markets are poised to open a little bit higher this morning, but it looks like we're giving back some of those gains. And I just want to look at S&P here. Okay, you can see we're selling down, then we had a little move up higher. All right, looks like 1200 is acting as a little bit of resistance right now. All right, 1202 is probably a better number. That's the number that's been in play for a while. I'll tell you about that some other time. But it looks like as long as we're holding under there, we could see a sell-off right here, coming back to maybe the 1187 area, because quite frankly, nothing's really changed. What's happened since yesterday? Well, there hasn't been a ton of news out there that's really going to lift economic spirits around the marketplace. All right, but one of the things that we're noticing here is that bond yields in Europe, okay, they're back under siege. All right, Spain's they just issued some notes. Those levels were higher. Now they're talking about France potentially having credit trouble. All right, and meanwhile, Germany sits back and says, no, this is it. This is really all we can do. ECB should not be the buyer of last resort, the lender of last resort, and whoops, we're just going to have to make do with what we have. So I don't think the market's very satisfied with that response, and it's going to be a matter of time and seeing where these yields go before some action has to be taken. But I got to tell you right now, euro does not look like a hot place to be, but nevertheless the euro currency, it's hanging right in there, as we were able to see here on the other chart. So that's really what's been happening with the euro. Okay, and you can see sitting right at that 135.50 level, just about. It's one of these things where the dollar looks bad, euro looks bad. All right, they both look bad, so it sort of sits right in the middle. If you want to look at something a little bit different, let's take a look at euro pound. Okay, and you can see euro's been rising against the pound here despite their problems with the funding. Now, what's been going on in the UK? Well, they actually had budget deficit came in a little bit better than expected, so they're working to reduce their spending. They slashed government spending. We know about the austerity there, but the problem that we have is that the Bank of England's got this accommodative monetary policy, and we're going to find out tomorrow just how accommodative they may want to be. All right, they're going to release the Bank of England rate policy meeting minutes tomorrow, and that's going to show us just how dovish they might be. So if we go back here, we can look at, let's just say, a 2-hour chart. All right, you can see that euro has been rising versus pound. Let me go back a little bit further. After settling in here, and this is, the whole debt crisis thing happening. So right now, this looks like we could be seeing a move back up to say 87 area here, especially if the minutes come out showing weakness tomorrow. Just want to take a look here at the Kiwi. All right, whoops. Let me look at this on 30. You can see, wow, Kiwi dollar has been down on the risk aversion trade that's been happening. Let's back it down to the 30-minute chart. See, we just got a little bit of a bump up here. All right, their inflation expectations came in a little bit lower than expected, which is not a bad thing. But you have to remember that the markets also are looking at inflation, saying, well, we kind of want inflation because then we want them to raise interest rates in New Zealand to make the currency more desirable. So the initial little pop there is getting a little bit of a pullback in New Zealand. What else do we have this morning? We have Canadian retail sales figures. Just show you that. All right, dollar CAD back up to this 104 area and just settling right in there. They came in as expected. I think it was 0.5% for the month for retail sales in Canada. A little bit later this morning, we're going to get U.S. GDP report and the third quarter revisions, expecting 2.5%, which is in line. The number hasn't come out yet, but that's what they're expecting. So we'll see what happens there. That number is usually not much of a miss. They're pretty right on with that thing. And then later today, we're going to get the release of the Fed minutes to see what they're saying at the Fed. So that could be a game changer a little bit later this afternoon. But to be quite frank, I think everybody knows that the Fed wants to be as accommodative as possible. The dollar should be pretty weak, but given the situation in Europe with their debt crisis and yields moving higher, and then the uncertainty of what potentially is going to happen here in the U.S. All right, we know that this debt committee failed. All right, but there is still going to be deficit reduction. The problem is that now everybody's backing away from the initial deal that they made. All right, that means massive cuts to defense spending, and then also to domestic programs as well. So we talk about the education gap in this country. That's going to be an area that loses money, and at the end of the day, money isn't the answer for education, but it certainly helps. And as far as defense goes, I mean, all right, say what you want about that one. This world's becoming a dangerous place these days, and now probably isn't the time to reduce spending on defense. But who knows? If you can do it smartly, may make sense. I mean, quite frankly, I don't think our troops should be over in Iraq or Afghanistan or any of these places. All right, but you gotta wonder about our role as the world's policeman if it's not time to put that puppy to bed. So, in any event, that's kind of what we're looking at today. We've got news coming out tomorrow as well, which will basically round out the week because we've got the Thanksgiving holiday on Thursday, which I'll just make you aware I will be taking the day off then to enjoy the time with my family, and we'll see what happens today. Markets look poised to move a little bit higher, but maybe we're waiting for the confirmation GDP figures to see if that's going to happen. So that's what I've got for this morning, gang. Good trading to all.